It does take us to our talk of the tape. What is next for stocks and how much rides on NVIDIA's numbers next week? Let's welcome our guest. Jordan Jackson is global market strategist for JPMorgan Asset Management. Stephanie Link, Hightower's chief strategist and a portfolio manager and a CNBC contributor. Both here, as you can see, at Post 9. It's great to have you. Jordan, I'll go to you first. I mean, it's a momentous week, obviously, and I think the question on everybody's mind is, now what? What do you think is next?
I think we've got some further upside from here. I think we could see on another 5 to 10% upside from here. The reason being, you've got three puts. You've got the Fed put, you've got the earnings put, and you've got the consumer put. Right? The Fed seems explicitly biased to want to begin cutting rates at some stage. It's not a matter of if, it's a matter of when. Earnings are coming in. First quarter earnings came in a bit better than expected. You've got double-digit earnings growth being expected for next year as well. Most of the performance in the market this year has been driven by earnings.
Okay.
Now, the wild card now is consumers, right? If consumers start to get a little bit more tapped out, which there's certainly some early signs of that, that could become a challenge.
Steph, is that what sort of has confounded the bears, that earnings seem to have mattered more than anything else? And in my conversation yesterday, right here exclusively with Rick Reeder, when I asked him what happens next, I want you to hear what he told me, and you can react on the other side.
The earnings are actually pretty good. There's stickiness to margins, the software development, AI implementation, et cetera. It's pretty impressive. Earnings are still pretty good. And so anyway, I know we've talked about it a bunch of times. I think people underestimate. You got an incredible technical in equities. Could you get another 10, 15% of the equity market this year? I don't think it's much of a stretch at all. Could you get a bit more than that? Yeah, I think you could.
I was pretty surprised by that pretty bullish view, right? I mean, somebody, often called one of the bond kings, talking about, look, he's the head of global allocation, so he has hats in many rings. But what do you think?
He's brilliant, right? So I don't know if we get that much higher in the markets by what he's talking about. We're already up 11%, Scott, year to date. And the long-term total return average for the S&P 500 is 7.7%. For fixed income, it's 3%. So, okay, it's great that he's excited about equities. He should be. I think not enough emphasis this week is on the economy, though, because we wouldn't have good earnings if you didn't have a good economy. So you had to get both of those things right. And we've been talking about the above average growth rate for the economy. We're running at about a 3.6% GDP number. And we got good CPI, PPI was kind of a wash this week. Retail sales was a disappointment, but look at the 6-month moving average. You're at 3.1% in retail. So you got to smooth it out. It's too volatile each month. So the economy is growing because the consumer remains strong. Manufacturing, we've talked about. Housing is actually stabilizing. And quite frankly, that is leading to better than expected earnings. If you add on the margin story, which was what Rick Reeder was talking about, everyone wants to call the demise in margins. But companies, especially U.S. companies, are so good at restructuring, reorganizing, in pricing power, and in adjusting. And I think that's what we've been seeing this year, and we're going to continue to see it. So are we up another 11% between now and the end of the year? I don't know. We are going to be higher, I believe, because earnings will continue.
Higher than where we are now.
I do think so, Scott. Is it 5%? Is it 10%? I'd be surprised if it was 10%, because we have had a nice year and a half.